Hi guys, welcome to the webinar. My name is Mark Shawson, the pattern trader. I'll be starting in just a few minutes. Just take your seat, get a cup of coffee, whatever. I'm going to wait for some people to start showing up and then we'll get started. Welcome to the webinar. My name is... I always forget to do that. I'm still getting used to this new software. Hey, Jovan. Payman, how are you? Hi, Annette. You've been here. Very loyal for a long time, Annette. Good to see you. I don't know. Oh, there it is. My camera does work. I wasn't expecting to be on camera. It hasn't been working. Let me just kind of straighten this up. So it hasn't been working, so I'm pretty informal here. How you guys doing? All right, guys, I'll get started in just a moment. Let's see, what time is it? I guess it's almost time, so I'll get started in just a minute. All right, guys, I'm going to get started here, and then everybody else can just join in. So welcome to day 3 of the 4-day live trade execution webinar series. I've kind of subtitled this, How to Take a Piece Out of the Middle of Monster Moves in the Markets. So I think I've explained over the last 2 days, what I try and do is take advantage of the huge moves that occur in the market. They don't occur every day, every week, but they do. Gold moved down from $1,900 to $1,700. Out of that $200 move, I took, I don't know, $160 out of that. I shorted the NASDAQ when the QQQs were at 334 a month ago, and took a huge piece when it slid down to 300. I used some derivatives, some options, to take advantage of that. Sometimes the markets are quiet. Like right now, you know, the stock indexes have moved up so much, and they're at an area where I think they're going to bump into resistance, but it may not translate to a huge move lower, which means we may just get this kind of, you know, up and down grind. Largely the FX markets have been, you know, in a grind. The dollar's, you know, I think going to go down long term, but it found some support, which means that we've just been kind of middling around. The yen pairs are trying to sort themselves out. Pound New Zealand, you know, put on a big move, and it's, you know, just kind of, you know, putting on, you know, huge volatility between 196 and 198. And so really I have, you know, very little expectations right now. So what I try and do is, you know, find a setup where the markets are going to make, you know, a big move. And like I said, it doesn't happen all the time. You know, if I look back, you know, it's like I make my money out of, you know, 2 or 3 trades a year. Last year, I made 7 figures going long silver when it broke out from $18 to $30. A month ago, I made 7 figures when the NASDAQ dropped 15%. So, you know, I'm good now. I'm good for the year. I'm good for, you know, so to me, you know, trading is a process like life, right? I try and teach my son that. He's 19 years old. You know, we're both fans of tennis, and for 15 years, you know, my son has just seen 3 guys lift the trophy in, you know, in tennis tournaments. has been the most dominant era of tennis in a while. But I said, there's a whole bunch of thousands of people that are, sorry, let me just turn this phone off. There are thousands of tennis players that are banging away, and life is a process, right? You don't just hold trophies. You've got to go through the grind. You've got to go through the sacrifice. And, there's nothing different in the markets. The markets sometimes just go through these things where, there's nothing really happening. But I'll show you today, I think I made 60, 70 grand in a market that I don't really feel like there's, a lot going on. So there's always stuff out there. There's always opportunities. And if you know how to, look at what the market's telling you, the footprints and, where it's pointing, you can extract a piece. And so today is really not a good example because frankly, I won't say I was playing around. I was doing things, consistent with what I tell you guys, but I wasn't really expecting a whole lot. So I'm going to show you, some trades. I was short Zoom. I shorted Zoom. This is the ticker symbol for Zoom. I'll put up the chart in a moment. And, I'll show you that, Zoom is inherently, in a very bearish price pattern. The long-term trend, I shouldn't say the long-term, but for the last 8 months, the trend has been lower. Zoom's gone from $588 to $300. And now it's just banging in this range between, 305 and 330. So every time it gets to 330, I just short it. I've made so much, it's just not even fair. So now this is an extract from my broker statement. I assure you, this is not a demo account. This is really a kind of a small position because I'm just, the market's in a range and, I'm just feeling it out. So last night, the market closed at 329. And then it opened today around 327 and in 10 minutes went down to 321. And then I just got out of it. And I made like $28,000 just in like 10 minutes. And then it went back to 330. And then I reshorted it and made another 30,000. I don't even know if I have it here. No, I don't have it here. So that was my first trade. Then I did it again. And now I'm currently short Zoom. I did the same thing in Tesla. So, we were talking for the last couple of days, what's Tesla going to do? So the first thing I do when, I'm analyzing whatever instrument I'm looking at is try and say to myself, okay, what is the phase or the condition, of this instrument? And frankly, if we look at this thing, in this time frame, it looks like it's really been ranging, from, the bottom, $500 level here, went to 900, hit 500 again, and it's just been bouncing in a range. But if you look deep within the price action, there are certain inherent price patterns and price action that is kind of pointing where the next move of Tesla is. So, the thing is, Tesla is, one of the most hotly debated stocks right now. I watch CNBC, this financial channel behind me, just for entertainment. I don't, try and apply anything they're telling me. But there was a whole discussion today about Tesla versus General Motors. General Motors is now putting a huge push into EV and, why is Tesla more valued than General Motors? And frankly, I didn't even have the volume on. I could just see the discussion going on in the background. But the thing is, Tesla, for its valuation, because of its, colorful CEO, it's, always in the news. There's always something going on. But really what I try and do is reduce it down to a very objective, set of information in front of me. So even though this is kind of bumping between 500 and 900 and it kind of looks all over the place, there are certain patterns in price action that you can kind of use to catch on both sides. So to me, it all starts off where you can't really see it in this picture. I'll put up Tesla in a moment. Tesla made obviously a huge move from $100 to $900, one of the most parabolic stocks we've seen in a long time. And then it put on this discernible price pattern where you could see right here at this 900 level, it had a double top. And then can you see here, it has these two shoulders. So it looks like a man or woman's head and shoulders price pattern. So you have the double top and the head and shoulders. And I call this a governing price pattern because this to me is going to govern or dictate the price action going forward, at least for a little while. So because this is a bear price pattern, it inherently means that prices are going to be bearish or going to be, under pressure and go lower. But there's all kinds of times where, it hits support, hits higher, hits another level of support, goes higher. But, those are, the misdirects. I always say that the market is like a magician. It's always, kind of showing you something before, pulls the rabbit out of the hat, in the end. And so all of these bounces here from, 540 and then, here we have this kind of double bottom looking thing where the NASDAQ is pivoting off this support line, Tesla also. But because of this pattern and because of largely this price action all the way here, to me, this guy, this soldier has been dictating, all of this action in here. This resistance right around 720. Every time we come up here, it gets, knocked back. Every time we come up here, it gets knocked back. And this guy right here, this key reversal has been standing in the way. So a couple of days ago, we had another key reversal. So now you have what I call an interim double top because, the bigger double top is up here. Now you have a secondary or an interim double top, which is also a resistance pattern. And then together with the double top, I also look at the price action. So you can see here, price went, higher. And by the end of the day, price was much lower, right? Close on the low, toward the low end of the bar. Did the same thing at the same area. Made a new high, close on the low. And then yesterday you had this funky looking, inside bar, kind of nondescript bar. And I was telling you yesterday, I didn't know if we were going to have another push higher, another push lower. And so the way I played this was, I let the market make the decision for me. So I do a question and answer on YouTube every day at 11 a.m. Eastern time. And someone said, well, how do you take the stress out of trading? Or how do you, de-stress from trading? And I said, first off, you set yourself up with a methodology that requires no stress at all, where you just let the market do all of the work. So once I came to certain conclusions about what was going on here, that, we had this bearish price pattern, another bear price pattern, I thought that, I think prices are going to be under pressure, go lower. But I didn't know for sure. You can see we opened just a little bit lower. We went higher. We bumped, between, 680, 685 all morning. And so all I did was I put a sell stop right under the low. Now, I'm shorting this. So there's a whole mechanism where in order to go short, your broker does it for you, but it's effectively, a little bit different than FX where, in FX, you just sell and then, and you buy in the same way. In stocks, you kind of have to get borrowed shares, but, I don't worry about that. I just put sell short in my broker terminal with a stop limit at 683, which was a hair under yesterday's low. So you can see for the first couple of hours, it bounced, from 683 to 690. And, I just went for a walk, left, sat outside, sat on my lawn. I've recently had surgery, so I can't do a whole lot. I was just sitting outside enjoying the sunshine. I had no clue what was going on here. I put my sell stop and, if the market kept going higher, then, oh, well. But it turns out my order was triggered. Now, when I took this, Tesla was trading at 672. What is it now? I think it's a little bit lower. It's Tesla is about 671. Yeah. So I got in at 683 and it's trading at 671, which means I made $12. And I did 2,000 shares short. So I made like 24 grand, in the last few hours of the trading market. And I'm still short, so maybe I'll, continue to make some money. But the point is, all I'm looking at is exactly what I'm sharing with you here. There are no Bollinger Bands. There's no moving averages. There's no volume. I'm not kind of listening to some guru on TV. I'm looking at objective price patterns, price action, and then I use a trade execution strategy. And I'm going to share this with you at the end. I've written a book. Show you my 4-step plan to get into a market, and I'll try to share that with you yesterday, but the link was down, so I'll remind me if I forget. And so I just layered it with an execution plan that, I put a sell stop under this kind of inside bar day. You had a key reversal, a little inside bar. And so I just put a sell stop under there and let the market do all the work for me. Now I'm in the market. I'm up 12 bucks. And let's see what tomorrow brings. I think this thing looks like it's going to continue to be under pressure. So, I always like to share what I do. I'm not trying to brag, but I'm just trying to show you exactly how you can make a ton of dough in the market, even when the market's really not doing a whole lot. So, between Zoom and Tesla, on a day where I wasn't expecting anything, I didn't even know if I was going to trade. I made 50, 70 grand or something. So these are two brokers that I use. I use multiple brokers, but just for my play accounts, I use these two brokers. Unfortunately, this broker does not show me where I got in the position, where the position is now, and what the PL was. So you can see that I was sold short Tesla at a price of 683.07. So I told you my sell stop was around 683. And I shorted 1,000 shares. So that was about, a $683,000 bet on that account. And then I sold 1,000 shares on this broker platform. And you can see that the P&L on this one, where as of, the time I took the screenshot, it was trading around 673. Now it's about 671. So I made, about $12,000 on each of these broker platforms, or made about 24 grand on Tesla. In addition to like 27 times 2, 50 grand on Zoom. And I'm still short Zoom. So, everything that I talk about, I promise you I am doing in spades in the markets. And so we'll take a look at the markets and see what's going on. But this is what I use: price patterns and price action. So Usama says, Mark, Tesla did the same as you described yesterday. Like you said, it does not break above 690. It will reverse. Great analysis. So thanks for that, Usama. What is the name of your book? It's called the Freedom Traders Playbook, Matthew. But I'll hand that out at the end. So let's kind of take a look at what's been going on. I kind of showed you what Tesla. So Zoom is my other favorite. I mean, every time Zoom rallies, I just sell into that. Now, it's not an arbitrary strategy. It's just based on observation. Zoom has got every bearish plight. Let me kind of drill this down so we could see this kind of up front. Nope, that's too much. That's about right. Whoa. And this will actually set up a trade for tomorrow. This is, a great example of every component of what I look at on a chart. And as I've indicated, you could be trading in any instrument. So this is an educational discussion. But really what I'm trying to do is share with you analysis that you can use. Sorry, I just want to make sure that on any instrument. So if you're trading the euro yen, you're trading corn, you're trading soybean futures, interest rate futures, whatever you're trading that has a price history, you can analyze whatever it is using a combination of just price. So to me, price is the news. People always ask me, do I trade the news? Do I trade information? And the answer definitively is no, because price is the news. Price is telling you where and what is going to happen ahead of that thing happening. So sometimes, we see something in the news, there's a huge tsunami in Japan. But in the meantime, the dollar yen was already like lining up and showing you some pattern where it was going to, crater. And so Zoom to me is a, kind of just definitive description of really what's going on in these high-flying growth stocks and why they're just going to get torn apart with interest rates coming up. Because these companies, in order to value these companies, you have to look out well into the future and then discount their earnings backward to create a present value, an enterprise value. And when interest rates go up, it just destroys these valuations, especially since these were trading at such high-flying valuations. But that is just background noise. That's just garbage. All I need is to look at what's happening here. And I think we drew this on Monday, and it'll be the same on next Monday and the Monday following that. This to me is what I call the governing price pattern. So just like the governing price pattern in Tesla was that double top, head and shoulders, so we have the same thing here. We have a double top and we have a head and shoulders. Looks just like a man or woman's left shoulder. Peak is the head, and that's the right shoulder. So this is the combination, and frankly, you have what's called a complex head and shoulders because you have a number of shoulders here. But whatever you want to call this thing, this is going to govern or dictate the movements of Zoom well into the future. And I don't think that this is going to be an understatement. I think this thing is going to crash $100, $150 from here. So once I kind of understand what the game is, from this time frame right here, which was 8 months ago. Now, this is one of the reasons why I don't advocate looking at, a 15-minute chart or a 4-hour chart, because you can't see this. And if you're trading in a 4-hour chart, you're just seeing this, which is just inherently random. You're kind of like flying blind. You're buying here, selling there, you're using a Bollinger Band or, moving average crossover, but you're effectively flying blind. Now with this, people ask me, well, how can I stay in a position so long? How do I have the confidence to do? This tells me everything I need. You have another double top here. You have another one here. And you kind of have another one here. Basically, this last couple of months, you've had this kind of descending wedge here. All these peaks. So what's happening is you've got this descending triangle. See how it just neatly, every time this thing goes higher and bangs into this resistance line, I just sell into it. I've made hundreds of thousands of dollars just selling resistance in Zoom. So now you have everything. This thing is just hanging on a ledge, and I mean literally hanging on by its fingernails on a ledge here. Because this whole double top, head and shoulders, double top, this whole thing is literally, it's like a huge descending wedge. This has got every bear price pattern that you could find in any textbook. There's just no question to me about what's going on here. So this line is called the neckline, which is simply a line drawn through the entirety of the pattern. And it's just it's not a question of if, but when this thing, knocks back here through 302. It's just got air under here. This is just a no-brainer. And so once I kind of understand, okay, so I open this up, could be any chart, corn, soybeans, orange juice, euro, yen. I say to myself, what is the direction, going on here? And frankly, I mean, if you just open it up and you don't understand patterns, you wouldn't really understand, because this came from a much lower level, went up, And now it really looks like, hey, this has just been kind of just meandering and, could go anywhere. Could form a base here and go back up. But to me, this whole thing is, building a reversal price pattern where it came from a lower level, put on a double top head and shoulders, which is a reversal, which then means that prices are going to get thrown into reverse. So once I understand, okay, direction, so I think it's pretty unambiguous. In the last 8 months, it's dropped from 588 to 320. So I think if I asked a 6-year-old, what's the direction, of this market, you'd have to say that it's going lower. So once we understand the direction, the pattern, then I look for ways to get in with the cadence, within the momentum. So the first thing is I want to understand, where do I hop into, to catch a ride on this train? And then how do I assess my risk? And if you can do that, then that to me is really the holy grail of trading, right? If you know where to kind of hop in and what your risk is, even if you don't win, and it doesn't mean you're going to win every time, but if you can assess those parameters, then you can be a big winner. So, right here, you see these key reversals right there. And what a key reversal to me means is that, and this is kind of why I look at bar charts and not candlesticks, because I can see this very clearly, is, I try and see where does a market close relative to the high and low. So this closing little slash to the right is where the market closes. So where it goes during the day is, arbitrary, but how it closes tells me everything. So we're in a downtrend, and in each one of these days along this downtrend line, market tried to push it higher, but by the end of the day, it closed on the low. So then I use these key reversals like hammers. So all I would do tomorrow is put a sell stop pending order right under today's low. So today's low was 319.23. So I would just put a pending sell short stop limit at 319 and then go about your day. The market goes up, you never get put in there. Frankly, what I tend to do is when I see these key reversals and then the market, kind of goes a little higher into it, I just sell into it knowing that this is my risk. And that way I can take a bigger position knowing that my risk is relatively small. And I feel very confident where that risk is. So sometimes I take massive positions, which looks very reckless, but I understand very well, where to get in here and what my risk is. To my mind, there's almost very little, risk that we're going to break above here. Now, if we do, that to me, might invite an equal or opposite reaction. I might say, okay, this is basing, it's going to go higher. So let's see what happens. So you're not always going to be correct, but, this is where, I make a ton of dough, where I see the setup and then, it kind of opens $3 higher. To me, that's just a gift. And then I just sell into that knowing that here's my opportunity. And that's what I did today. I just, shorted it into yesterday's high. It, went lower, then it went back. I shorted it again, and now I'm short again. And now I went overnight short Zoom. And believe me, I'm not going to lose any sleep about it. I don't think this is going to, open up $50 on me. And so, the more it kind of bangs along this support line, eventually this thing's going to get, give way. And then you've got all of this history sitting on top of this support level, and it's just going to give way like a ton of bricks. So this to me has been, this and Peloton are kind of the poster children of, why I think these growth stocks are just going to get hammered. Now, this is a very different picture than what you saw in the indexes today. So I think the indexes might have even been up because the big high cap market cap NASDAQ stocks like Microsoft, Facebook, Google, they all made all-time highs. So it's a very different picture when you look at Zoom, that's, going from 588 is now 300, where you look at Facebook and it's making all-time new highs. I love this stock. This thing is going to go much higher. But what I'm saying is that, people say, well, what's the market doing? And, you could say, well, the market actually was kind of higher today. I don't know what it did. Yeah, closed a little bit higher today or unchanged. But underneath that, there's all this destruction going on, in these second tier stocks like Dash. And you just see a giant double top here. I was saying to people on a webinar 3 months ago, same kind of webinar, when this thing was in the 200s, that we're going to go a lot lower in DoorDash. And so you can see this huge key reversal, made a new high, close on the low. That was it. You'll never see that high again. Sayonara. This was a recent IPO. You can see that it's just treading water at, at its, support level of 120. And you can see that this thing, got really hammered today. So the indexes were up because these big name stocks, close on the highs, and they're 20% of the indexes. So that's why I said, in my weekly video report, like 2 weeks ago, I said, I'm not really going to be trading the index as much. I'm looking at individual stocks. Beyond meat. So this is, again, a great example of something where I think there's like immediate opportunity, like tomorrow. Like tomorrow, I pray this thing opens, $3, $4 higher. And I will just, open up with both barrels into it. Sorry, it's too big. So this is a stock that I've been talking about for a long time, that I think it's, also going to $75. We're trading at 130 right now. And I was saying it's going to, $75 all the way up here. You just have a plethora of bear price patterns sitting on top of this thing. And this thing is just sitting on a ledge at 113. And, if this comes down here again, believe me, there's going to be nothing but air underneath here. You've got all of this price history sitting on top of a ledge. And so that's why I think these indexes are very elusive. They're sitting at or close to their highs. But if you look at this stock that peaked a couple months ago, $218, it's in half, 50% lower. DoorDash, 50% lower. Snow, 50% lower. So there's been a whole destruction. Tesla down 30, 40%. So the indexes, are very misleading of the destruction that's going on in these growth stocks. And I love shorting markets because gravity works. Markets go down a lot faster than they go up. And so, once I understand what the game is, so here was this double top right here. And, sometimes, I anticipate these things. So, made a peak, hung out here, and then it was going up. And you can see this day, it closed there, and then it opened there. So this is where I say, these gifts, the market sometimes just gives you these gifts where I anticipated that this was going to look like a second peak. And I don't know if I can find it. Let me see if I can find it real quick. Maybe it was, sorry, I'm trying to find a trade in BYND. It must have been even a month earlier than I thought it was. Sorry, I'm going to try and find it. Okay, this might have been it. So I just want to show you how, you can look at markets and take advantage of them. So I know that, some people will, say in disbelief, this is just like a magic show and this is just a demo account and on and on. I assure you, this is not. And I'm telling you the tools that I use right in front of you. So when this closed here and then opened there, I surmised based on this price action right here, made a new high and then closed on the low. And when you see that huge range bar, that signifies that it's over. So you can see that it hung out here for a while and then, attempted to make another rally. And I was anticipating that this was just going to be the second peak. So I try and visualize these things in my mind, kind of be ahead of the game. So frankly, it was this thing that told me all the way back here that this thing had peaked. So now this was just the second one. It's like the appetizer. So right here, when this thing was trading at $178, I bought the 175 puts. A put option is an instrument used to bet on a decline in a market. And I paid $250 for those options. So when it was trading, so the thing is, I bought it when it was rallying, anticipating that it was going to go lower. And that's actually the best way to buy options. If you try and, go with the momentum and it turns on you, you'll lose a lot of value. So I bought these 175 strike, which means that my break even was 175 minus the 250 I paid, or 172.5. And I only had like 3 or 4 days, until these expired. But you can see that right that day it collapsed and then it went to 161 and my options that I paid $250 for, I got out at $12.35. I made 494% in 2 days or 3 days. I bet 12,600 and I made $50,000. So this is how sometimes I use derivatives when I see certain opportunities. And believe me, I'll be doing the same thing tomorrow. So now that I kind of understand what the game is here, this thing's in a huge downtrend. You can see that just like Zoom, we're just in this wedge here where we're just, going lower. And so this is what I call my insurance day bar right here. This is what I call a key reversal. And again, I'll be offering my book at the end of this, and I talk extensively about a key reversal inside bar. But really what this says to me is that, they try to push the market higher today, and then it closed on the very low of the day. So that tells me that this is over, that, the buyers try to get it up there and it closed on the low in a market that's going lower. So to me, I think there's very little chance you'll see, prices over here. So now I understand where to hop in on the ride, on the momentum of this. And I also understand my risk. To me, that's the holy grail of trading. And then what I try and do is, when you have a big bar like this, where, it closes on the very low, typically, it's going to sneak back into that range on, at some level. So I'm praying that you get a $3, $4, $5 rally here. And I'll use that to either sell short or buy puts or, do whatever. So I call this kind of an elastic band, right? So, it's like, you don't want to have energy that just goes like that. You want to have something that pulls back like an elastic band to give it more energy to then go lower. But regardless of what it does tomorrow, I mean, this thing, I think is just, it's just a matter of time. So I don't know what that level is, probably about 120, but, these are the levels here. And it starts, getting through these levels. Watch out. Now, a couple months ago, when I actually did this trade and I bought these puts, I think it was on the same day, an analyst came out and put a 180 price target on Beyond Meat. Wrote this fancy article on why, how the company was doing business with Kentucky Fried Chicken and Coca-Cola and had all of these, agreements. And so if you read this and that's how you trade based on news, on information, you can see the disparity between, where this person thinks it's going and where it really is. And guess what? The market is right 100% of the time. So, that person probably got $1 million a year to, write up these analyst report, and they're basically worth the paper they're printed on. The only thing that counts is the market. So Carol says, do trading volumes play any part in your analysis? So Carol, again, I would refer you to this chart. This is all I look at to make just oceans of money in the market. That's it. There are, there's no moving average that I can see. There's no Bollinger Bands. And there's no volume. There's nothing on this chart but price and time. So we call this a clean or a naked chart because there literally are no indicators. Volume is just an indicator. It's kind of like the old stockbroker's joke. I'm trying to remember. The guy calls up his client and goes, I got some really good news and bad news for you. And the guy goes, well, give me the bad news first. And the guy goes, well, your stock was down and you're basically wiped out. And the guy goes, oh my God, well, what's the good news? And he goes, well, it was down on lower volume. So that's what that means. So Bruce is saying, do I still think that Coop is a good stock to short? So I made, a ton of money shorting this after a news event. It's, since come up, but I think the patterns are still in place where this thing looks like just a massive short. I mean, this whole thing, I can open up this chart and just see these mountains here that translate into this, head and shoulders price pattern. So this is Coupa software. And again, it doesn't matter what the name is. I just look at the pattern, price action, and try and make trading decisions around that. So, this is a double top. This is kind of like a funky head and shoulders. And it's a drooping head and shoulders. So the neckline actually is drooping lower, which means that this is going to go down very, very quickly. So once I understand chart pattern and direction, I mean, this has been, mashing about for quite some time. It could continue to, but basically this thing looks like, it's going to go a lot lower. I'd have to put up a longer time frame, but frankly, looking at this thing, I think it's just a question of time before this thing gives up the ghost and goes a lot lower. So you can see that everything is just treading water. BYND, all these things are just hanging on literally by a thread. This, these trend lines, and anything through here, and there's just like air under here. And you're looking at the indexes and saying, well, but the indexes are at an all-time high. And that's why you have to look at the instrument itself, right? If I told you the triple Qs are up today, the Nasdaq's up, what does that mean? Tesla was down, $20 today. I made, 20 grand in that. Zoom was down $10. I made 50 grand in that. So what do the indexes mean? And you can see, so you have like a bit of a double top here. This is a key reversal. When I see key reversals, I'd like it to a little bit bigger, but it's still a reversal. So to me, I look at pattern trend. I would just put a sell stop there and see what the market does. If it takes you in and you lose a little bit, then oh well, you move on. But, frankly, this thing looks like it's going to do that. It's hard to believe. You look at the news and there's all this stimulus out there, and people are talking about. Jamie Dimon just wrote this letter. Jamie Dimon, the head of JP Morgan, said that we're going to have a great economy till 2023. Stocks are going to go up till 2023. So, how come I'm so bearish? Making all this money selling these stocks short, because the pattern is telling me. So I'm not looking at the news, the distraction out there. I'm purely only looking at everything that I'm showing you right here. That's it. So Evo says, how do you select the right stocks futures? So I just look at a chart pattern and then it speaks to me. And like I said, I don't care if this was orange juice futures or cocoa or the euro yen or Coupa. I just look for risk and reward. Like BYND, when I see a price bar like BYND, where it had such a huge reversal, this tells me there's like almost no risk on the upside if you get short this. So, I have the pattern, the trend, and now I have this huge washout day. So this is really what I look for. I'll look for any chart where I can see the trend, the combination, and what I call my insurance day bar, where something really stands out, where I can get a foothold in that thing and understand where my risk is. So Foy says, I'm confused. I'm looking at the YouTube here. You're bullish on pound yen, but bearish on stocks. If the stocks are due for a fall, then the yen. Well, first off, I'm not bearish on stocks. I'm bearish on a certain subsector of the growth stocks. There's probably a whole handful of industrial stocks that I could look at, like Procter and Gamble and Caterpillar and whatever, that are going up. So I'm just showing you opportunities. I try and find opportunities. I don't care, if you're looking for things that are going to go, I'm not funking for something to go one way or another. I'm just looking empirically, objectively, and I'm not making correlations. So if the pound yen's going up, then I can't, go short Tesla. That to me just, doesn't wash. If you look at gold, gold was weakening. Gold went down from 2,100 to 1,650. Went down, whatever, what is that math? $450 at the same time that the dollar was weakening. So now, you've been told all your life that, if the dollar's weakening, gold's going to go up. So how well did that correlation work for you? So I don't look at correlations. I look purely at price and information. That's it. So look, you guys can be rightly, suspect of, whatever I'm showing you. I just showed you how I made, I don't know what it was, like 70 grand today on a day where nothing really happened. The index is actually closed higher. So I'm just trying to show you how I extract money out of the market. And that's really what, what it's all about. And I'm not looking for these, piecemeal moves. Foy, no problem. Thanks for your question. Chifafandalus says, in the previous stock, why not wait for the price to break through the resistance at 167 as additional? Isn't it kind of random to sell at 175? So right here, you're right. This was, I was anticipating, so look, I've been doing this a while, and sometimes I visualize how these charts are going to line up. There's a certain architecture to the way prices stack one on top of the other. And I already visualized from here that this thing was going to go lower. And I can get in a whole elaborate discussion on, let me just stick up more information here. I have a theory. It's not even a theory. To me, it's kind of like, and you won't find this anywhere. It's just my thinking, rightly or wrongly. but it usually works out that way. So my thinking is, if a market offers you an opportunity to go up or down, it doesn't offer you limitless opportunities. The market makes two bottoms and then it goes. And if you didn't catch it, then, it's not going to, sometimes you'll get a triple bottom. It'll give you 2 or 3 opportunities, but it won't give you 20 opportunities. If this is a really great market, is it going to give you 20 opportunities to get in before it goes? No, I don't think so. That's just kind of the way my thought process. And so really what I'm talking about is this ledge right here, where it went to, this price level around 113, 115, I don't know, countless times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So my thinking is, even though you bounced off here, and this was during this, GameStop Reddit kind of BS move, that even when it was up here, and guess what? I was short when it was up here. So I know very well exactly when it was up here. It's actually a pretty funny story. I actually got, I was obstinate. I got short in here because, again, this is my theory. Once a market hits an area so many times, and it's the same thing. It's like, it gives you 2 or 3 chances, but, do you think that it gives you 20 chances and then it just takes off and then it's off into the ether? And now you get into this great move and then it, just goes up for years after that? No. The market gives you 2 or 3 opportunities and then it's gone. And so I got very obstinate. So right here, and, just to show you that, I'm prone to make human errors and be obstinate and, do stupid things. So right here, I surmised that this was a double top head and shoulders. And we were looking at this huge neckline, and I thought here that it was basically over here. I thought really we would go there. And this is where the market, shows you these busted patterns where if something doesn't do what it's supposed to do in here, then it's going to go the other way. And, I should know better and I should have gotten in sync with that. But I got really obstinate and I shorted right there. And, even when it kind of came down, it came back here, I knew I was in trouble and I didn't get out of my short. Actually, I had 4,000 shares on and I got out of 3,000, but I had 1,000 shares short right here. And I know exactly what this day was. I was in surgery in New Jersey, a really aggressive surgery. And I obviously couldn't look at my charts and didn't want to stress out. And that night, a friend of mine calls me up and says, "How you doing?" and this and that. And, we talk about trading. And he goes, "By the way, did you see that Beyond Meat went to $218? I shorted at 147. So I was like, I couldn't believe it. Fortunately, I had enough in my account to defend it. People will ask me, why don't I put a stop loss? Some trades, and I hate to admit it, I don't put stop losses on. And this is one trade where obviously I could have gotten very hurt. But that is a true story. And then I saw the way it closed and, I kind of referred here. And then my thought pattern was that it's eventually going to crack this thing. And I just stayed in it. I stayed short and I ended up making money on my 1,000 shares. I got out somewhere in here, made like $10 on it, which is a terrible trade. You risk $80 to make 10. But then, I shorted it all the way down here too. I bought those options and, made a ton of money. And so this is kind of like Pound New Zealand, where I see certain things, and I hate to admit it, but I don't put stop losses in things where I think I know where it's going to go until it starts violating things. And I should have gotten out here because this was violating this pattern. Once this thing kind of didn't do what this head and shoulder, once it came up to the second shoulder, that was over. That was actually, a reason to get long. But this is where I was obstinate. Your ego comes in and on and on. And I just feel that we're going to come back here no matter what. Even though the analyst said it's going to 180, I still feel that we're going to take out 113 and we're going to see a $75 print on Beyond Meat at some point. You just kind of measure the move from this neckline from 115 to 195, that's $80. Let's say you take 3/4 of that and you shave $60 off this neckline, it puts you around $60. And I do believe you'll see it there by virtue of this pattern. But, again, I think I got diverted about, the pound yen and why do I trade this or that? I don't, I just look at pattern and price action. And if I've got a pattern and then price action that tells me, where I can get in, where I can hop, a ride on this bus and where my risk is, that's what I look for. And I don't care where that opportunity's occurring. On the long side, short side, I bought lift on the same premise. I saw double bottom, inside bar, started buying lift. So this is all I do all day long is look for these opportunities and then try and hop aboard these trains. Roxy says, what are your thoughts on shorting the Dow? Like I said, I think that these indexes are pretty close to a huge resistance level. And then what they'll do, you can see now we've got, I think I did this analysis yesterday where we're trading at the top end of this ascending broadening price pattern. Right at this resistance. And you can see we've got 3 days of these very narrow range bars. And so, I've learned that these little narrow, they look very benign, they look very innocent, but they can lead to, huge reversals. This market is still strong and, it would need some kind of catalyst to push it over, but, people could just be in a profit-taking move. I don't ever look at the reasons why. I don't ever ask the reasons why something's going to move somewhere. The reasons to me are superfluous. It's like, how much and when? How much do I have to risk? And what's the likelihood of this trade going from one level to another? So you can see that we're locked up in this thing here. And if we kind of take a peek, somewhere here, we could just take, a nice spill. But the indexes, you can see, are just locked. They're very range bound. And they're not really, telling us, what's going on in a whole bunch of other stocks where, they're just getting caved in. Some stocks are going up, some are going down, and frankly, when I was looking at Lyft, which I'm inherently bullish on long term, but when I kind of see this price action, I got to believe that the NASDAQ is going to start petering out. And so, I'm just looking for, Lyft to come back into the mid 50s again or low 50s and, I'll buy it again. But right now, this is pretty bearish price action. Lyft, Uber, these are stocks that I thought were going higher. Uber is a little funky. It's still in this kind of ascending thing. It's coming into this symmetrical triangle. But, these stocks are struggling up here. Snowflake is, something that I've shorted for a while. I'm kind of looking at it today. I don't really see it. I saw the double top right here, start shorting it on this key reversal, made a ton on this thing. Now it's just kind of in this drift here. I don't know if it's going to make another move, probably make another move lower here. You can see that this reversal is kind of commanding it, but I think Beyond Meat is easier. I think Zoom is easier than, this. So I know we talked a lot about pound yen earlier this week. Pound New Zealand, I'm sorry. And, now this thing, is looking like it's starting to drift lower. So this is where it kind of gets a little bit, sometimes it's not perfect. I got in at 193. It's, still around 195.78. So it's not a horrible trade, but, again, I just feel like this should go higher. But if something doesn't do what it's supposed to do, then, I'll hop out. So this to me was going to lead to something like that. Notwithstanding the fact that it went nowhere for, 2 months, I kind of, got in, at these low 192, 193 area on the premise that we were going to get one of these. We got it. I thought it would extend. I still kind of feel on the weekly that it will. And it's going to be very interesting to see how we do, right here. I mean, obviously, if we start breaking, this thing's, going to start breaking. We should hold right here. So I actually bought some right here today. I just added to it, and I'll hop out of everything underneath this low. So, we were looking at these, things, and, anytime I see that is a double top, these key reversals were pointing the way lower. I kind of thought that, it would be a fake out and we should go higher. And, we've been drifting lower. So again, FX right now it's too range bound. I kind of look where the action is, where I can get some extension on trades. And I don't care where that is. I just kind of hop around, look for gold, look for anything I can to see where, the action is. And, I've been sitting in pound New Zealand for a while. I got in the 93s. I've still got a couple hundred pips profit. I still think on the weekly, let's see what it does. Even though it looks pretty bad for the week, yeah, this could, definitely have another poke lower. I don't think you're going to see these lows. So that means over time, I think that this thing's going to go higher. But it just hit this resistance zone and, could pull back to, it could pull back to here again before we get another lift off. And then I'll look at it then and get back in it. But you can see, I mean, it's somewhat been a difficult trade. FX is difficult right now. Dollar trades are difficult. Yen trades are, I'm long euro yen. But, I'm looking at this area right here that could be, formidable resistance. So right now it's kind of holding up, but it could do anything. This could turn into, a double top area, and, we'll see what it does tomorrow. It's still really, euro yen has been observing this huge uptrend line. So really what I'm trying to demonstrate is that how I look at price action on any instrument. And really what I'm looking for is something where I can assess risk and reward and where I think, there's going to be a move. I'm not looking for an intraday move of, a few pips. Tesla fell $20 today. Zoom fell $10 today. And I think those trends will continue. So that's really what I'm looking at. So when I look at euro yen, it kind of all started with this, kind of inverted head and shoulders. And we have been really adhering to this uptrend line. I mean, really well. And so this will be a clue. If we start, petering out here and then turning through here, that would be, to me, a clue that maybe there's a turn. So I've been, long these euro yen, with one eye open, because I always feel like this thing could turn on me. But right now, it's not really showing that, usually when something turns, you see this reversal here, and then, maybe we see something like that. So if we saw something like that, and then it broke through here, then, I would say, well, maybe we're at hand. So I'm really on the fence, because I showed you yesterday the euro yen is sitting on this huge monthly resistance level. And, could easily be pushed back from here, or it could be a monster inflection point where, if it gets through here, it's going to go a lot higher. So we're really at this inflection point within this symmetrical triangle. And it just amazes me that this is a 10-year chart. Every day, people making decisions about euro yen based on this, that, and the other. And then an architect couldn't draw a symmetrical triangle more perfect than this, joining 10 years of price history. So it always amazes me about trading. And so when I look at something like that, I mean, if you look at euro yen, it's really been inherently that kind of stuff. And so we could say, this thing could break up or down. So when I look at something that's meandering, then I try and look deeper into the price action and the price patterns and determine which is going to govern the next direction. And to me, those bear price patterns, the head and shoulders, the double top, have been governing. But this is kind of like beyond meat, right? Where this double top, if this was the resistance, we probably should have turned back here if that was still going to be governing. The fact that now we've crept, all the way above this suggests that we're starting to break this governing price pattern. And so it could be like beyond meat where, that's no longer governing. It becomes a busted pattern. So you can see we are really at the moment of truth where, there's going to be a lot of money to be made, if this is a paradigm shift or this turns. So, we may be not quite there, but I think there's going to be an opportunity to set up a trade that can make a monster amount of money. But right now, I've been, for the last month or so, really making a lot of trades in the stock market. So I just go where the action is. So let me, kind of take some questions now. I think what I've tried to do through these 3 sessions is just show you my thought process, show you how I look at markets and apply price pattern and price action recognition to any trading market. So what I try and do is put a structure, a boundary, try and recognize, okay, where are all the patterns? Where are all opportunities? Where are all of the pitfalls? And then try and sometimes, like beyond meat and Zoom, it's, very apparent to me about what's going to happen. With this, you could kind of sway me one way or another. I still think we're going to go lower. We did have this double bottom right here. And you could say, well, this is a double bottom. But as I said to you, if the market's good and it bottoms, it's just going to go and not let you in. It's going to have a case of higher lows and higher highs and away you go. But after this double bottomed, you had a case of lower highs. And so to me, you're still in this secular downtrend, but trends end. And we could be looking at a monster paradigm shift. I think anything above 135 would then obviously suggest that, something's adrift here and we're definitely turning. So we're right here at this inflection point as to, which way we're going to go. And typically I'm pretty good and confident in assessing which way we're going to go. I mean, frankly, this does look like the governing price pattern right now. You have this inverted head and shoulders. And so, you just got to close your eyes and say the path of least resistance is higher for now. So Margaret says, do you trap key reversal on buy and sell stops at the same time? Not quite sure what you mean by that. Usama says, what is an inside bar? Can you explain that? So an inside bar, to me, represents a compression, right? So, you see prices, and then all of a sudden you see something like that. So that to me is an inside bar, where the high and low is within the high and low of the previous bar. Now, this is a monthly chart. So each one of these are monthly price bars. But you can apply this analysis to a weekly chart or a daily chart. But all it means is that you have, to me, what an inside bar represents is a storing of energy. And I always make this metaphor of a beach ball where you put your hand on top of the ball, you push it further and further down, and then, you let your hand off and, then the pressure just uncorks, right? Usually, upward, but I'm just trying to use it as a metaphor. So to me, this is just a storing of energy. And then once we kind of understand what the trend is or the prior pattern, then we can surmise where the energy is going to, uncork or unleash. So, you can see all along here, there's, these inside bars. So here is an inside bar. Here is an inside bar. And so if you put your sell stops there, every time after that, there was this unleashing of energy. Here is an inside bar. And then we had an unleashing of energy the other side. So basically, I don't look at key reversals or inside bars in a vacuum. I have to determine, what is the trend leading up to those stack of bars. So this is kind of the third step for me in my process. And then once I think the trend's lower and then I see my key reversal inside bar, then I just layer it with a trade execution plan that says, okay, I'm just going to put my sell stop underneath the range of that key reversal or inside bar, like I did today on Tesla. And, I've laid it out in my book, which, I'll kind of share with you at the end here. So to me, an inside bar or a key reversal, I don't look at those in a vacuum. I look at it, consistent with, so here is a huge key reversal, made a new low, close at the high. And to me, this is why I look at bar charts and not candles, because when I see something like this, it kind of points in the direction it wants to go. When I see this key reversal here, made a new high, close on the low, it pointed in the direction it wanted to go after that. Made a new high, close on the low, pointed where it wanted to go after that. So that's why, these bars just stand out to me so well as opposed to candlesticks. But whatever floats your boat, there's no right or wrong. So this is an inside bar right here. You can see that the range literally sat within the range of the prior week. So it's a storing of energy. And by virtue of the prior pattern and trend leading up to it, we surmise that the energy was going to release to the upside. So basically, I'd look at an inside bar like that, put my sell stop there, and walk away. And now you're looking at 500 pips of profit. Doesn't look like much, but that's 500 pips between the high of that inside bar and where we are now. And that's how you make 500 pips in the market. Not 7 pips, looking at a Bollinger Band crossover on a 7-minute chart. Does that make sense to you guys? Mohammed says, thanks for an amazing review of the market. You're the best. So Mohammed, thank you so much. So Usama, did that make that clear? So Margaret says, yes, Yvonne, yes. Okay, perfect. So my gold and silver charts on this thing are messed up. I don't know why. I can't get the history. So I'm just going to pull over this MetaTrader platform. Let me put my gold. I'm not quite sure what has been going on here, but I cannot. Nope, too much. So this is kind of what's been going on with gold. If I had a broader thing, I would. Let me see if I've got the weekly. All right, let me put this chart up first. So this is the weekly chart of gold. And for the last 4, 5, 6 months, I've been telling our members, I was very bearish gold, and I had an exact target for where I thought gold was going to go by virtue of this ascending broadening price pattern. Now, an ascending broadening price pattern is a pattern that goes higher during the pattern, starts out like very narrow, and then widens or broadens out at the top. Pound Australian was in this thing like 6 months ago, and I made just a ton of dough seeing this ascending broadening price pattern. So all the way up here, when I saw this double top, I started telling our members to get short at 1841, then at 1797. And I had a take profit of 1687. And I made a ton of dough on that move. So this is, again, a good example how I look to take a piece of the middle. So I took this much, out of this huge move. So now you can see that, we basically, went to the lower end of this support level, not quite. And, we made this interim double bottom. Looks pretty significant on the weekly, the daily. And I don't know, this looks like, it could be the basis for something like that. I don't think so. This price action to me seems so heavy and so profound that it would take a lot for this thing to cut through here. But look, that's how patterns happen. You can't question them. They just form, and then later you see that was the bottom. So right here, about 6, if it went through this neckline of 1750, what I would say to you is that I don't expect this thing to go up dramatically, even if this is the bottom, because just like pound New Zealand, when you come down so pronounced, you've got to do some work before you turn that thing around. So we may be looking at the bottom, but I wouldn't rush right in. So, I'm kind of questioning if this really is a bottom. I mean, it looks very pronounced on the daily, weekly. Let me see if I can get a monthly here. But on the monthly, I don't know. I'm still skeptical. So we have to go through the neckline around 1750. And so to me, and that's why I use bar charts, because they're a little bit clearer. And I'm sorry, there's something wrong with this this thing, and I hope to have it worked out by tomorrow, but we'll see. So you have these huge key reversals on the monthly chart, right at this resistance level. So you have a double top there. You've got another one here. So it would have to do a magic act to go back up. And that's why I'm a little bit skeptical. I mean, you could have another move here, and then probably an opportunity to sell it again. So we could have made, a very interim short-term low that maybe you could trade off of for some bucks. But I'm kind of skeptical that, we're going to go, hugely higher, despite the fact that it looks like such a profound double bottom. And that's why, it's so helpful to use these different time frames. And that's what I do. I toggle between the monthly, weekly, and that's why, how I'm able to avoid the traps and the pitfalls, because it looks like something on the daily and the weekly, but on the monthly, I don't see it. But, a lot can happen in a month. It could go, here before it goes there. So, there still could be a $50 move on the upside out of this double bottom. Yeah, I don't think my charts are working. I don't know. Maybe it is working. Huh. No, see, on the daily, it's not. So, and I don't think, no, this is not up to date. It's trading at 1730. So this is not up to date. So it's not working on these charts. There's an ETF that tracks gold called GLD. even when I look at this ETF, so here you have a perfect double bottom with the key reversal price action here, which should suggest that, we should get a move higher out of here. But I'm still somewhat skeptical. And again, sometimes I prevent myself from doing, when I look at this thing, it still looks like this is a downtrend. So, it looks like a bottom, and those weekly reversals suggest it is, and maybe I'm overthinking this thing. This has been in a, and it could just turn into a huge busted price pattern. So we have this descending pattern here. And this really sets up for, so this has been a downtrending market. And, again, I think that right buried in here is this key reversal. So that guy is commanding, just like that reversal we saw in Tesla, it's kind of commanding all the price action in this area, which is, I guess, what, 1740 to 1760, somewhere in there. So, if we get above this guy, which I don't know what it translates into a gold, it's probably 1750, 1760, then we could, kind of go back into this thing. And if we start coming out, then, that would be one story. On the other hand, we could just fade back into the direction of the trend. So we're at a very interesting inflection here on gold. And I probably should just close my eyes and buy it, because this, does look like a pretty, and then I have to kind of say, well, how does it work its way through all of this price action? So this is the visualization, and I play these games all day long with these charts. And, so sometimes the market looks like it's laying an opportunity, double bottom. And that's kind of how I've learned, to recognize when some patterns are the governing pattern and some are not. And so we're really at an interesting point here. And to me, it's just, if you're not sure, just let some time go by and let price tell you which way. If this thing starts leaking, then you can see that this bottom is not happening. On the other hand, if we grab a foothold and we go through this neckline, this is a time to get in this thing. So again, I can make an argument either way right now, but on the daily and the weekly, it looks pretty profound. And then when you see on the weekly, these two price reversals at the lows, it suggests that, we've dug in pretty good. Silver, on the other hand, is a little bit more ambiguous. So this is an ETF that tracks silver, SLV. And again, I'm trying to just let you into my process here, how I just kind of look at these things and think about things, because I can see a couple of different, ways to look at this thing, where to me, this has like a huge inverted head and shoulders, an upside down looking man or woman's head and shoulders. This is where I got in last summer, right there, and, made 7 figures on this breakout. And that to me was pretty clear. This is not so clear. I could make a case for this thing, going either way. And so it's just, letting some history go by and seeing what it does. So on one hand, I have the inverted head and shoulders here, which is inherently a bull price pattern, which should, project prices going higher. I also have this interim double bottom, which is also a bottoming pattern that should project prices higher. And then we have this, key reversal last week, which also projects prices higher. But then I have all of these things at the top here, all of these key reversals here that now I got to say, can the market get through all of this? And so these gold and silver could be in the process of turning higher. It's just going to be, I think, a process like pound New Zealand, where it's not going to be easy, but it'll be a case of, higher highs and higher lows. And right now, the passive, least resistance, if I had to pick a direction, is somewhat higher. Having said that, if we turn around and take this out, then prices are going to go back in here. So we're just, in this dead zone here. And I think this shows you that, on certain things like Tesla, I see almost clearly. Zoom, I feel completely confident about. Beyond Meat, I know what I'm going to do tomorrow. Gold and silver, I'm on the fence. If I'm on the fence and I'll just wait, let some more time go by, I might miss getting in right at, a better foothold, but at least I'll have the advantage of kind of having a clearer picture of what it wants to do. Michael, you're welcome. So Larissa wants to look at Palantir or Netflix. So Palantir, I can tell you, is definitely bearish. It's obviously a new IPO. I just look at this and I see the double top and the head and shoulders forming. And if it cuts through this neckline, it's just going to go back, underneath here. So all these stocks, this just stands out crystal clear to me. So there's this woman, Kathy Wood, who trades this ETF called ARK Financial. She's supposed to be the next Warren Buffett, the next guru. I think she's just a total fraud. I think she's defrauding people. She said Tesla's going to 3,000 or something like that. To me, it's going to go to 300 first. So you can see, to me, this whole trading pattern, this whole history, like when I look at Lyft, the whole history of Lyft is a bottoming pattern, and the whole trading history of Palantir is a topping pattern. So, if this thing, gets down to whatever this is, $18, it's going back to 10. Netflix, on the other hand, is, a much more solid story. So there's definitely, two tiers of the market. Netflix, Facebook, Google, Microsoft, they're all going to make new highs and they look great. The second tier or third tier, whatever you want to call them, of the Zooms and the Pelotons and the Palantirs, look like they're going to get destroyed. So it's like that Ernest Hemingway novel. It's a tale of two cities. This is a tale of two markets, where Netflix looks like it's going higher. It's just in this huge consolidation zone, but it's, an ascending market, and I imagine that it'll just keep going higher. But, I'm not really interested in trading this chop every day. So, again, I just try and look for opportunities where I can see some clear sailing ahead of me. So again, Facebook making new highs, Google making new highs, Microsoft making new highs, Netflix, all of these in the first tier are going higher, which makes the indexes look like they're, all intact. And then there's complete destruction underneath there. The QuantumScapes, the dashes, so this is QuantumScape, QS. I also think this is going lower. So you have, nice key reversal today. You have a key reversal here. And, I would just short in this thing. It's like almost no risk. This is just a huge head and shoulders waiting to go lower. All right. I'll take a few more questions and then we'll end it there. Could you? So Alumphany, sorry if I messed that up. It says, I'm very new to this process. I have a question. Is this different from Forex trading? So to me, a chart is a chart. This could be the euro yen, or it could be QuantumScape, or, it could be the pound New Zealand. To me, it's a chart with price history. And I analyze all price history the same. So I just, my whole methodology is predicated on the philosophy that the market is a discounting mechanism, that the market is ahead of the news. And so all I study is the market. So this is an obscure stock. It's called QuantumScape. I think it's a cloud company. I don't know what the freak it does. But whatever it does, it's overvalued for whatever it does. And it's going to go lower. That's, how I would look at any chart, whether it be the euro yen, Australian dollar versus US dollar. I just look at the price history because price is telling me the trajectory of the instrument. Price is the news. Price is a discounting mechanism. So by the time a central bank says something in Australia, to me, the previous price action was already indicating. So whatever the news is, it's just a catalyst for sending this thing where it's going to go anyways. So I just look at this thing. It's in a huge downtrend. You have a double top here at 51, and you have these key reversals where it made a new high, close on the low, made a new high, close on the low, and we're going there. I would put a lot of money on it. In fact, I do every day. I put $1.2 million into Tesla today, shorting, Tesla. I shorted, 3,000 shares of Zoom twice. That's $2 million. And, I would short this. I mean, to me, this is just it's like what happens to me is now I get like, which one should I go to? Beyond Meat, Zoom, Tesla. It's like, I know what's going on in here. Margaret says, any suggestions on how many pairs of the trades optimal same time in the beginning? Sorry, I don't understand your question. So Ronald says, can you point out the open, the close, the high, and the low? So these are bar charts, right? So a bar chart, and I just have high, low, close. I don't really care where it, you can see that, this probably is a Sunday where you can see this left hash mark is the open, and this little mark there is the close. So if you look at a bar, the open is there and the close is there. And so all I do is look at the high and low, could be a daily, weekly, monthly, and then I look, where did this thing close relative to the high and low? So to me, that closed relatively closer to the low than the high, which indicates that the sellers were in control. But just because I see a key reversal, it doesn't mean I can just fire at all key reversals. It has to be in cadence with what I'm looking at. What is going on here? So I see a head and shoulders, I see a down thing. So even though, I might see, a key reversal here, which you did see right at a key support area, and it does translate to higher prices, I might take that trade. But I call this a counter trend trade because I know that my take profit on this one is much less than this one, which is the real trend. But what I'm looking for is to get in sync with whatever, the market is telling me. And so I use a combination of these key reversals and inside bars to get in sync. So today we had a key reversal. You can see that it opened there, it went higher, and then it closed right there on the low of the bar. So it opened there and closed there. So can you see that? That's what I call a key reversal. Market went higher earlier in the day and closed right on the low, right in a downtrend. So since I know the trend is down, since the energy is faced, in a downward thing, I want to be in sync with the energy. Now how do I join this trade? Where I can get in sync with the momentum and also understand the risk. So basically I would just put a sell stop underneath that low of today. That's your risk. And to me, that's your reward. So if I can set up a trade with a 3-to-1 risk reward where I can understand where to get in a trade, where to put my stop loss, even if I'm right half the time, I'm going to make a hell of a lot of dough. Gareth says, I bought KTOS and WRK today. So you shouldn't have done that, Gareth, because what I do is so I was looking at both stocks today. Actually, I think WRK did make a new high. But KTOS didn't. So I said yesterday, this is KTOS, that maybe we're looking at a bottom here. And maybe, so here's your inside bar. So what I do is, once I understand the pattern, and then I find my insurance day bar, let's say it's the inside day bar, then I layer it with an execution strategy that says, okay, I'm going to put a buy stop over the high here. And you can see that it never went higher. It just went lower today. So I would never have been put into this market. So even though it's on my radar, I may take a look at, I'll keep taking a look at this thing. These, obviously prove to be resistance like pound New Zealand, and, it's maybe just going to force this thing sideways for a while, and then maybe it'll give me a signal somewhere else down the road. So I would not have gotten in this. On the other hand, I think WRK did break the high and then turned lower. It did. So now you have a kind of a conundrum like pound New Zealand, where the energy of this thing is going higher, but I never like to see these reversals at the top here. Where you can see that this is definitely a resistance level. So you can see it made a new high, close on the low, and it did the same thing today. Now, is this a double top or triple top? I don't think so. I think that this is just going to be just a slow train, but I think one day you'll wake up and this thing will be 65 or 75 bucks. So you do have this uptrend line. Maybe you do get a pullback here, but to me, I'm going to use these pullbacks to get long. Somewhere along here, this is going to be a great buy. Because I think the weekly pattern, this is like lift, where there is definitely resistance in this area here. But I think the underlying pattern is such that you'll find that, and again, sometimes you see a signal and then the market goes 3 weeks or 3 months after you saw it. So just because it doesn't go now doesn't mean, you were wrong or I was wrong. I got into lift prematurely, and I'll show you. So to me, first off, I look and try and find the gestalt for this thing. What is actually going on here? So, maybe there is, a long-term downtrend and this thing just ran into a trend line and maybe it'll be pushed back lower. But I think that ultimately there's going to be a great buy somewhere in here, just like there was in lift. So to me, this is the pattern. So once the market has bottomed, it's very unlikely it's then going to top, right? The market just doesn't bottom and then top. The market usually, and scientific, we actually did a study of this. Scientific analysis shows that once a market's bottom, it'll go for 100 days, at least in one direction. And maybe it's already gone that 100 days. So maybe I've run the gamut here. But to me, you've also got this inverted head and shoulders. You broke out of this thing. And, it looks like you broke out, circled back, and you're just hanging out here. This could be just a weekly inside bar where even if it doesn't go below this low, maybe, next week you put a buy stop above the weekly high. And that's what I would do. And if it continues going lower, no harm, no foul. You're not put in this thing. But at some point, this thing's going to go there. So you can see we're just hanging around right at the top. I mean, nothing's really happened. You're at the highest level it's been in 8-9 months, and it's just, it kind of failed today. But I don't know if it's topped. I doubt it has. And frankly, I wish it would pull back because I would just load up on this thing. So I'll do one more and then so this was Lyft, and I was looking at all, early this year, figuring out, I don't want to be in the Amazons or Apples. I want to look at these second tier, opportunities, these unsexy, unloved kind of things. And this was the second, cousin to Uber. But to me, this looks so clear to me. That to me just looks so clear. And so here was the same thing as WRK. So it broke out and and these are weekly bars. So you had 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months of it doing nothing. And I actually made a bunch of attempts here, and lost like $1, $2. I just make these trades, banging back and forth. That doesn't go anywhere. And so this is WRK. You say, okay, well, it's not working. Yeah, I'm not going to pay attention to it. I'm just going to leave it. And then all of a sudden it's there. So, if you understand what's going on in terms of the governing price pattern, then it could take some time, but eventually, you'll get an opportunity. Now, Lyft is, like the pound New Zealand, just ran into this tier of resistance. And, maybe we just got to come back here a little bit. But at some point, Lyft is going to be a great buy. And I'll just, wait for that opportunity. Double bottom, key reversal, somewhere in here. So just because, I send out things to my members and, and it doesn't kind of work right away, it doesn't invalidate that WRK, I think, is still, going to go up at some point. All right, so I said I would share, my book that basically explains, my 4-step process. And the great thing about this book, it's a pay what you want. So whatever you value, you expect to derive out of this, $5, $10, $20, $100. What I do is whatever you decide to donate, I double that and send it to the American Childhood Cancer Organization. I sent, something like $25,000 last year. Everything that I take in from my book sales, whether you buy it off my internet or wherever, I take that, I double that amount, and I send it into the American Childhood Cancer Organization. So I'm going to add the link in this chat box here. And that will basically spell out, everything that I'm trying to, put in a couple of days. How to look at the markets, identify the phase or the condition, find the pattern, look for your insurance day bar, layer it with an execution strategy. So it's kind of a 4-step process that puts you closer and closer to the bullseye, of a great trading opportunity. And you saw today, I hit the bullseye on Tesla. I just looked at the chart pattern. Here was the pattern, the governing pattern. Here was the interim pattern, the key reversals. I put my sell stop under yesterday's low, 683, closed at 671. I made 24 grand in a couple of minutes. I made $54,000 in the same day, shorting Zoom at 3:30, based on the same premise that you're looking at here. So Cynic says, thank you for your input and resources. Natalie says, thank you, Ms. Shawson, for your great reviews. Thank you. John says, thank you, Mark, for your great teaching. Andrew says, great webinar. Thank you so much. You guys are really welcome. I actually love doing this. So look, I made whatever, 70, 80 grand today. I don't even know. I don't care. I really just enjoy the satisfaction of seeing setups, putting trades in, and then it works or it doesn't work. And then I just move on. I don't really care about the money anymore. And I know I mean, it's weird to say. I just got to that point, and it's really not about having a lot of money. It's just, getting to kind of a level where I understand. I love trading for the intrigue. It's like being a detective, finding that market, finding that setup, finding that reversal bar, finding that thing that's gonna, just stand out at you. So when I look at Beyond Meat, it's like there's just no, it's not like the euro yen, it's not like pound New Zealand, it's not like there's no ambivalence. I know exactly what I'm looking at, what I want to do. The same thing with Zoom. Tesla, still betwixt and between, but I think that Tesla is going to keep, keep being under pressure. Mustafa says best session among super sessions. So thanks, Mustafa. Daniel says thanks a lot from Norway. Show you these comments coming through so quickly. The guest room are ready whenever you want to come by the nicest fjord in the west of Norway. Daniel, that would be great. I'd love to visit there. I've always been intrigued about Scandinavian countries and would love to get there. And that's really a phenomenal invitation. So thank you. Francis says the best beast. I'll take that as a compliment. Lars says, thanks for one more great webinar. I learn a lot every time I watch you. All right, guys. Check out my book, and we'll wrap it up tomorrow. And maybe you guys can share some trades that you did or you're looking at, and we'll take a look at that. All right, Linda, thanks so much. Zvravo, thank you. All right, guys, cheers. We'll see you later.